Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. Before we get started, just wanted to remind everybody to support us if you have a chance or if you can. Even $1 helps, and we have a link in the description to a website called Buy Me a Coffee. It's just a way to donate to us and support us. Again, any amount is helpful so that we can keep putting out content. And there's also other ways for you to support us in the show notes to this podcast or on YouTube in the description. Today's episode, I wanted to talk about a new service offering that is probably doing pretty well in the Big Four accounting firms right now. And it might not be 100% new, but it's definitely growing, and it's at a level that it's never been at before. With all the craziness going on in the Big Four accounting firms right now, I wanted to talk about this because we've been talking a lot about layoffs and downsizing, but not everything's gloomy. There are things that are doing very well. And I mentioned before how the equity markets in the United States have done really well. And because of that, there's public companies that need a lot of accountants. So that's one area of accounting that's probably doing very well, is accounting departments and tax departments in these big organizations need people. So if you get laid off or you can't find a job at the Big Four accounting firms, it doesn't mean your life is over. There's plenty of companies that need help right now. And another area that is heating up because of public markets doing well is SPACs. Now, what are SPACs? A SPAC stands for Special Purpose Acquisition Companies, and these have become very popular recently. And these are IPOs where the money raised in the IPO is used for the acquisition of a target entity. And it is an alternative to an IPO to raise capital. And it's an alternative to using debt and other types of financing. And it's become popular with private equity companies and hedge funds, and they've been using these vehicles to target companies that they want to acquire and take public. And there's been a few of these that are pretty popular recently. One of them is Nikola, and Nikola is kind of funny because, or Nikolai, however you want to pronounce it, because Nikola is the first name of Tesla, and they're trying to basically do what Tesla's doing. And some people think that Nikola is a scam. I mean, it sounds kind of like a scam because they just took Tesla's first name. But regardless, they're an example of a SPAC along with DraftKings and some other companies. But these have gotten very popular. And I think it's an area that people interested in the Big Four accounting firms should look into. And according to various sources, there have been about 81 SPAC IPOs in 2020 to date that have raised more than $33 billion. And that is almost triple of the amount raised in 2019. And all this is during COVID-19, remember? So that's pretty crazy, right? Everybody wants to tell you that the world is falling apart. But these SPAC IPOs are raising tons of money, and the equity markets are doing very well. So if not only if you're looking towards equity markets, you're looking towards the most popular part right now, or at least the one that's hitting the headlines the most, is these SPACs. And these SPACs aren't going to be out there by themselves not needing any services. This is a perfect area for the Big Four accounting firms to increase their revenue. This means a lot more accounting and consulting work for the Big Four accounting firms. IPOs have dropped off a lot over the past few years because a lot of companies don't want to have to deal with all the regulations and all the financial statements and the regulatory requirements of being a public company. That's why private equity has become so popular. But these SPACs have actually made IPOs popular again and has given a ton of work to the Big Four accounting firms. And right now, it appears that the Big Four are classifying their guidance for SPACs under their audit section of their websites. But you could specialize in this field under tax, audit, or advisory because SPACs are going to need all of that work. They're going to need tax work, audit work, and consulting work. But in each one of those areas, you should focus on getting a job in the mergers and acquisitions industry of the Big Four firm you're interested in, because tax, audit, and advisory in the Big Four, each of them has mergers and acquisitions in there. So if you want to specialize in SPACs, you would probably need to focus on that. And if you wanted to read more about this, there's a Harvard Business School article that provides an overview of SPACs and their SPAC timeline, which I thought was the most helpful. Now, PwC also has an article on this that is pretty helpful, but I think the HBR article is more useful. But out of the Big Four accounting firms, PwC was the most proactive. They were at the top of the rankings when you search up the big four accounting firms and SPACs. But Deloitte's website is also a good resource, and they have some downloadable files and accounting guidance that I thought was very good. And SPACs are a great way for the big four to earn money during this downtime in the economy. They can make money from SPACs by consulting the acquirer on which target to acquire, because that's the whole purpose of a SPAC is an acquisition. And they can also consult companies on how to be targets of SPACs, because you have an acquirer and a target. And there's a lot of private companies out there that might want to get sold to a SPAC because there's so much funding. So you can get a nice exit price if you're a target. And they can also help all the regulatory requirements that come with taking a company public. Because there's multiple things that the SPACs have to file. They have to file a proxy statement where they let shareholders vote on whether or not to consummate the transaction. And they might also prepare a combined proxy statement and a registration statement for any additional shares that are issued as a result of the acquisition. And additionally, there's something called a Super 8K that must be filed no later than 4 business days after the close of the transaction. So the SPAC goes public, and then they have some time to figure out who they're going to acquire. But once they actually acquire the company, you have to file this Super 8K. And the Super 8K must detail the completion of the transaction, and it must also include all of the information that would be required if the target was filing a Form 10. And pro forma financial information must also be prepared for the transaction, and along with those pro forma financial statements, you have to have all the proper accounting requirements as well. So the target's audit firm will have to do a lot more work than they're used to, and that's where the big four accounting firms might step in if they're not already doing the work. And the initial IPO of the SPAC isn't that hard, because the SPAC, when it goes public, isn't really an operating company. It's not really a company that has a history and actually has operations in it. They're just out there to acquire another company. So the initial part of the SPAC going public might not be that complex, but once they figure out who they're going to acquire and the acquisition starts going through, that's where the big four accounting firms stand to make the most money. And previously, many of these SPACs were in the energy sector. Like in prior years, a large percentage of them were in the energy sector. But more and more, I think, are in different industries, and I think there's going to be a lot more in the technology sector. And this is a growing niche in public markets, but it's also going to be growing in the big four accounting firms. So make sure to look into this if you are looking for a growing field in accounting and the big four accounting firms. So that's the update for today. To get future updates, make sure to subscribe to this podcast. Contribute to us financially through the Buy Me a Coffee link in the show notes if you get a chance. And if you don't, subscribe to our YouTube channel and like the video on there. Thanks for listening.